Hello everybody, I'm John, this is JP Strategic Investments, and today we're obviously talking about Xtract One Technologies earnings, formerly Patriot One Technologies earnings. And I do want to mention actually before we get into the video, I myself will be doing some rebranding soon, completely unrelated to Xtract One, Patriot One. I've kind of been planning this for about 6 months, just wanted to make sure it was really the right decision. So if you guys do see some kind of channel changes in the name and in the channel art, that's kind of what's going on. That'll probably be happening maybe over the next couple of weeks or so. But just wanted to mention that in case you guys do see some of that and maybe get confused. I'll go over kind of some of the name and some of the logo and stuff a little bit later. But I just wanted to mention that just so you guys know, so you guys have a heads up. But let's jump right into these earnings. And I do want to just start off with the one negative point from the earnings, because really 95% of these earnings were amazing. They were phenomenal. But obviously, the one major negative is the cash position. I will say it is definitely a much lower cash position than I expected them to get to in this scenario. I was definitely expecting a little more revenue, which is why I kind of expected that we hadn't seen a cash raise yet. But I do want to kind of make some points here. One, it is definitely a risk, right? Anytime a company gets very low in cash, which Patriot One is, or I'm sorry, Xtract One is right now, it is definitely a risk. And investing in this company, right? Any company at this point, at this stage in their growth, is going to be very risky, right? It's a high risk, high reward, and that doesn't fit into maybe a lot of people's portfolio, a lot of people's trading or investing strategy, and that's fine. But if you guys are invested in Xtract One, if you guys have been following the company for even just the past couple of quarters, we all kind of knew that sometime this year they were at least going to have to raise cash once, right? So it shouldn't be necessarily the dilution or the potential for dilution. I would say even, the likelihood, the kind of 100% chance of dilution right now, that shouldn't really surprise any of us, right? Now, what is concerning, I think, for a lot of people, and like I said, myself included, I didn't expect them to get necessarily this low, but I will say personally, and you guys can make your own decisions, I don't think, the business is in any jeopardy necessarily of running out of cash. I'd say that's a very low likelihood right now. I think they do already kind of have people who are interested in the stock, and I think, while, you can go back and forth on whether or not they should have waited or done this, but I think they did really want to get these numbers out there before they went through with the cash raise. Again, you can, go over whether or not that's a good strategy, whether or not that's worth the risk or stuff like that. And again, I don't know that personally. I'm thinking maybe that's something that they wanted to do. That's just my thoughts. That's not, that's not anything that I've heard directly from management or anything like that. But I think with the cash position right now, one thing that is a good point to make is when they raised cash last time, right? If we're just worried about the dilution here, they raised cash last time and, there was maybe, I'd have to go back and exactly look at my numbers there. But there was maybe like 5 or 6% dilution with the possibility if all of the options are exercised to get to maybe like 9% or so, somewhere around there. Those numbers might not be exactly accurate, but it wasn't a whole lot of dilution, right? They only raised close to $6 or $7 million, right? But then the stock this year is up like 30, 40%, obviously after, yesterday, down a little bit more from there. But personally, if it's that little of dilution and I get that big of a return, I'll take that trade-off any day, especially if the alternative is the company runs out of money and goes bankrupt and I lose all my money, right? That is something we have to keep in mind. We pretty much, at this point, if we don't raise money, if Xtract One, I'll probably be doing that over the next, several weeks or so. But if Xtract One doesn't raise money at this point, then very likelihood is bankruptcy, right? And I don't think any investor wants that. So it's kind of a necessity. And on top of that, it's very likely going to help the company be extremely successful in the future. And so that's kind of what I want to talk about next, because really, like I said, the rest of these earnings were phenomenal, right? The growth that we're seeing here. So if I get into some of this spreadsheet, and by the way, I'm going to be pretty much focusing mainly on the platform aspect of the business. The Xtract specific portion of the business is still bringing in a decent amount of revenue, and hopefully it does continue to get contracts and contribute. That would be great. But really the main focus of this business, and especially into the future, what the main revenue bringing and the main focus of management and sales and everything like that is really the platform aspect of the business. And also the Xtract portion can be a little choppy. I've mentioned this before with revenue, with how their contracts work. So I think it's really much better from analyzing the earnings, analyzing the growth, and really how the backlog is growing. I think it's really probably better to focus mainly and just specifically on the platform aspect, because the Xtract aspect, because it's choppy and because it's really not the main focus of the business, can kind of distract from really where the growth trends are. So that's kind of what I'm going to be focusing on. So if we look at backlog, again, just platform backlog, which is this line right here, right? We can see quarter over quarter change, huge, 42%, right? That's phenomenal, okay? Platform revenue up 60% quarter over quarter, right? And on top of that, amazing, signed agreements pending, and Karen said, I believe most of these are pending installation, some still pending, the successful pilot, but another $4 million there in signed agreements pending, right? So if you include, that in the backlog like they do in some of their statistics, right? That's close to $6 million there. I think they said in some cases over $6 million. But that is awesome growth. That is amazing. If you look at some of the charts here, put together some of the charts. This is total backlog. So like I said, this includes Xtract, and there you can see it kind of distorts really what it is. So this here is actually need to retitle this chart here if it will let me. This is platform backlog, including signed agreements pending, right? So you can see the growth there, and especially from this quarter to the last, the significant increase, right? Before we were looking at a trajectory kind of along this area, more linear trajectory. Now it's really starting to look more sort of exponential. Don't want to maybe quite go there yet, but it really is kind of looking like that. And this is purely just platform backlog, excluding the signed agreements pending. But you can still see kind of level, and then we're really starting to tick up here in the last quarter. And the other thing that I want to mention here is a lot of times companies, when they're at this stage, when they're not profitable yet and they're starting to really scale the business, we see significant increases in expenses as well, along with revenue. And that leads to a lot of losses, a lot of cash burn, right, in the short term before they can truly reach the scale where revenue continues to grow and expenses kind of level off. We're seeing right now, if you look at, revenue versus expenses or loss versus expenses, revenue increased, right? Platform revenue increased while overall revenue did decrease technically. Platform revenue, which again is what I think personally that we should really be focusing on. You guys can make your own, kind of assessment there. But platform revenue increased, and we saw a decrease, and actually a pretty significant decrease in expenses. And Peter kind of mentioned, that they were at an inflection point. And seeing this reduction in expenses, and the comments, I think, from Karen, where they said they expect sales and marketing to even decrease a little further because they had some one-time expenses that they don't expect again related to some events that they held and things like that. Seeing that amount of decrease, while they were saying that this is a high point maybe in expenses for sales and marketing, along with this growth, right? That is pretty huge, right? That's something that you don't usually see with companies that are growing, that aren't profitable yet, that are at this stage of the business. I mean, if you look at the expenses, really quarter over quarter, the only two expenses that increased were sales and marketing and hardware, the ones that are directly related to selling and making the product. Those are always going to increase if your revenue increase, right? If sales increase, the cost directly related to making the product is very likely going to increase as well. But literally every other expense decreased quarter over quarter. That's pretty significant. That's pretty huge in my opinion, especially when you're getting this amount of growth in the business, right? Obviously the signed agreements pending aren't, that growth, you could say, you could kind of back out because the costs, the sales and marketing and the hardware that is specifically related to that maybe isn't actually recognized as a cost yet. But even still, you look at this 60% growth here, 42% growth here, and decreasing revenue, that to me is really significant. And the other thing I want to talk about here is the, we'll say, projections that we got. We really didn't get, forecasts as far as actual numbers and whatnot. But Peter did mention, and Karen did mention, that they expect the trends that they saw in Q1 to continue. They expect the growth trends to continue. And you could take that kind of two different ways, right? You could take that as, okay, they expect, to bring in the same amount of new sales, new revenue, and whatnot as they did in Q1 going forward into Q2 and maybe 3 and 4, right? Or you could interpret that as the growth rate they expect to increase, which would be significantly more bullish because, if they expect to, I think they said they basically did the same amount of revenue, or they did the same amount of business in Q1 of this year as they did in all of last year, right? And so if they expect then in Q2 to do the same amount of business as they did in the last 4 quarters, and in Q3 and the 4 quarters prior to that, that's significantly more bullish. And, also probably less realistic, but even so, we don't really know what he's saying there. So I kind of laid out here the kind of 2 possible scenarios, show you guys what exactly that would mean, and then you guys can kind of, interpret and make your own analysis from there. So the first one here, this chart right here, basically, this would be if you took platform, and I'm just looking at platform here. If you took platform backlog and gave it the same dollar amount increase quarter over quarter as we saw from Q1 to Q4, or Q4 going into Q1, took platform revenue and increased it by the same dollar amount going from Q4 to Q1, and took signed agreements pending, same thing, Q4 to Q1. Just took the dollar amount increase and did that for Q2, Q3, and Q4 of this fiscal year, right? That shows you what that would work out to if that's kind of what Peter is saying when he talks about seeing those growth trends continue, right? If that does happen, if that is what he is meaning by that, and they are able to execute on that, by Q4 of this fiscal year, that would put the platform backlog, again, this is specifically platform, this doesn't include maybe any extra revenue that they'd be getting from this Xtract specific segment. Platform revenue, platform backlog would be 3.5 million. Platform revenue would be almost $1 million, about $900,000. And the signed agreements pending would be just over $10 million, right? Pretty significant growth, even if, and I think this is kind of at the low end of the estimates here, because if we're talking about the same growth rate, right, the same rate of growth rather than the same specific dollar amount of growth, then we're talking about significantly more, right? If we're talking about the same growth rate, right, we're talking about 42% quarter over quarter. We're talking about 60% quarter over quarter when it comes to revenue, and we're talking about over 100% growth quarter over quarter when it comes to the signed agreements pending. And so if you look at what that would look like, that is this chart right down here. And you can see by Q4 of this year, that would put the platform backlog at $5.3 million. That would put revenue just for the platform, again, not including the Xtract specific segment, at $1.7 million. And that would put the signed agreements pending at close to $40 million, okay? Now, do I think that that's likely? Personally, I'm not quite convinced on that yet. We'll kind of have to see a true trend. If we see Q2 and, Q2, I'll kind of leave this up for the next earnings and we can do some analysis as far as, okay, does the growth look closer to this Q2 or does the growth look closer to this Q2, right? And then we can kind of make some projections as to where they might end up at Q4. But this, would be very, very significant growth. This would put, the company in a very good position. We'd likely see a huge increase in the stock price. But what I do want to point out here is that even if we get the low end of the scenario here, right? Even if we just add, I think this, in total basically adds, you could say $3 million in contract value to, if you kind of break it down and include backlog, revenue, and signed agreements pending each quarter. Even if we get that low end, right? We're talking close to $1 million in revenue. Likely, I haven't done the exact math on that, but probably close to 700,000 of that or so would be recurring revenue, right? Quarterly recurring revenue, and then 200,000 on top of that would be like specific upfront contracts that they got in that quarter. But then a $10 million, right, signed agreements pending, this would still set the company up. This would still be great growth for the company and would set the company up for really, really good numbers into the next year. Obviously, we're probably, in my opinion, going to be closer to this lower number, but we very well could be somewhere in the middle. I think, if you look at the mid range of this, right, that would be awesome if the company is able to do this. But like I said, even if they're able to just get that low end, we're looking at very significant growth here. And I think investors, myself, I am really excited. Obviously, the one thing weighing on the stock right now is the capital raise. We don't know how much they're going to raise. We don't know how they're going to do that, what type of dilution it's going to cause. One thing I will say about that, if we're seeing these kind of numbers, right, and we're seeing them expecting that amount of growth going into the future, I don't think we're going to see really a huge amount of dilution. And like I said before, if you're talking about stock performance versus the dilution, the trade-off there, let's say they even do, 15% dilution here, right? And keep in mind, from last time they raised money to this time, right, they do have a higher market cap now, so the same dollar amount of money raised will actually cause less dilution. But that's a side note there. But even if they do dilute by 15% and they take in, a decent amount of cash, what we're seeing from the growth here, we're very likely going to see probably a much more significant increase in the stock price in this fiscal year than even what we saw in the last fiscal year. So I personally more than willing to take that, again, especially if the alternative is essentially bankruptcy for the company, right? But like I said, again, if the cash position, if this type of company isn't really fitting into your portfolio at this point, especially maybe with the current economic situation, whatever your personal financial situation is, that's all something that you have to decide on your own. Personally, though, I'm willing to take a little bit of dilution if we continue to see this amount of growth, because like I said, I can't emphasize it enough. It's phenomenal growth, and especially if it continues, and especially also on top of that, right, if we see this trend with expenses, even if we see expenses flat, right, or slightly growing, and we were to see this amount of growth, I would be more than happy, right? But to see expenses falling, that's great. So anyway, that's kind of really my my main points on the earnings here. One last thing actually that I do want to mention. There were some people mentioning they did see some big buys yesterday. Obviously, the stock price fell pretty significantly. I think at one point it was over 10%, I think. I wasn't watching it the whole day. I was at work. But it would be awesome. I kind of made the point in my Discord server. They saw some large buys, I think, midday, and kind of picked up the stock price here. It would be great if we saw some insider buying, especially with that large of a dip after these really, like I said, 95% of it was awesome earnings. If insiders are really that confident, in what we're seeing here and in the future growth, and they don't think the dilution is going to be that big of an issue, if I was an insider, I would be buying that dip there. So it would be pretty cool. Maybe we'll see. Who knows? Obviously, just some pretty much just pure speculation, but it would be cool to see some insider buying. Definitely give some investors a lot of confidence there, seeing the management put their money where their mouth is. So anyway, that is kind of my main points on these earnings. As always, leave your comments in the comments below. Let me know if you have any questions, if you kind of disagree, or what your analysis is. Let me know also where you think, maybe that growth trajectory falls more towards the, pure dollar amount increase versus the actual growth rate increase. And yeah, other than that, I will see you guys next time. Have a great day.